Hello students. So third lecture of bonus shares. Almost will be able to wind up with the chapter today. After that some formalities of theory part will only be required. Now today we are going to take up with two types of questions in this lecture. Last lecture we covered with partly paid bonus issue. In this lecture we will cover with fully paid bonus issue of shares as well as mixed examples where you have partly paid bonus shares also and fully paid bonus shares also. Total 5 questions we are going to cover in this lecture, but they are very simple. So what I will be doing is one question 2, I will explain you thoroughly, understand it properly. After that, question 3 you all must be able to, question 6. After that, question 6 you all must be able to do on your own. So I will not explain the solution in the video lectures. You all pause the video, do the solution of question 6 on your own, then play the video. I'll place the solution in front of you with explanation and you verify you got it correct or not. Same way, question 3, which is a mixed example of partly and fully paid bonus shares, I will explain in detail. After that, for question 7 and question 1, you pause the video and try the solution on your own. And then you play the video. I will bring the solution in front of you with bit of explanation and you verify whether you got it correct or not. So total 2 questions I am going to explain in detail in this lecture. One is on fully paid bonus shares, question number 2, and one is mixed example, question 3, which is fully paid as well as partly paid bonus shares, on both of them. And then 3 questions you all will be trying on your own during this lecture only, and then you will play the video and verify you got the solution correct or not. So let's start with question 2, and before that all of you pause the video and revise the entries properly, because now we are taking up with fully paid bonus shares, so revise the entries of fully paid bonus issue. Okay, look at the things everyone, be attentive. Question 2 of your study material. Shiv Limited had issued, underline the word issued, share capital of rupees 20 lakhs, in rupees 10 equity shares. So 20 lakhs divided by 10. How many number of shares would be issued by the company? 2 lakhs. I repeat, Shiv Limited had issued share capital of rupees 20 lakhs in rupees 10 equity shares. So capital amount is rupees 20 lakhs, 10 is the face value of shares. Then how many number of shares would be there? 20 lakhs divided by 10, 2 lakh shares. Then we have securities premium rupees 1,50,000 now. Now this question we are doing on fully paid bonus shares. So can securities premium be used for fully paid bonus shares? Yes, it can be utilized. Okay, it cannot be utilized for partly paid bonus shares, but it can be utilized for fully paid bonus shares. Okay, FPB stands for fully paid bonus shares. Further, capital redemption reserve also can be utilized. Okay, capital redemption reserve also can be utilized for fully paid bonus shares. And what do you mean by undistributed profits? Do you all remember this? Undistributed profits, I told you in the last lecture. Come on, what does it mean? Come on. Yes, profit and loss accounts credit balance. Undistributed profit means profit and loss accounts credit balance is rupees 8,80,000. Now it was decided that fully paid up bonus shares of rupees 10 each to be issued. Now all of you underline, at the rate of 1 share for every 4 existing shares. So ratio you all mark it as 1:4. 1 for every 4 share means ratio is 1 by 4. 1 is to 4, 1 by 4. Presently 2 lakh shares are there. So you normally make this equation kind of a thing. 1 for every 4 shares means you say for every 4 shares, bonus given would be 1 share. So for 2 lakh shares, as we counted in the beginning, company already has 2 lakh existing shares. How many bonus shares would be given? 2 lakhs into 1 by 4. But instead of doing this complicated workings, what is the shortcut method you all can follow for this? When they say at the rate of 1 share for every 4 bonus shares, you write it in the form of a ratio. 1 for every 4 means 1 is to 4 ratio. Okay, 1 for every 4 shares means you all make it in the form of a ratio 1 is to 4 ratio. 1 is to 4 means 1 by 4. So simply do 2 lakhs into 1 by 4. No need to make this complicated workings. Okay, I repeat it once again. After this workings I will not explain in detail. Directly we will derive the ratio only. It was decided that fully paid up bonus shares of rupees 10 each be issued at the rate of 1 share for every 4 existing shares. See, for every 4 existing shares, rate of 1 share means 1 share of bonus is to be given. For every 4 existing share, 1 share is to be given in bonus. How many existing shares are there? 2 lakhs. So against that, how many bonus shares will be given? 2 lakhs into 1 divided by 4, 50,000. But what is the shortcut method of doing this? When they say at the rate of 1 share, so here 1 is to, for every 4 shares, so 1 is to 4. You write this 1 is to 4 as the ratio and then directly do 2 lakhs into 1 is to 4 means 2 lakhs into 1 by 4. So 50,000 bonus shares are to be given. So this is the shortcut we will follow in all the questions, okay, instead of doing in detail this workings. If any confusion, you can pause the video and rewind it again to understand that. And that this resolution be carried out by using, now underline this, using the minimum amount of undistributed profits. As such, do you all remember the priority of utilization of reserves? For fully paid up bonus share, which is the first priority? Capital redemption reserve. Second priority, security premium. And then revenue reserves in any priority. So third priority would be undistributed profits. Okay, you all can refer to this lecture 1 what we had done. You'll find it over here. For fully paid bonus shares, first priority capital redemption reserve, second security premium. Capital reserve we don't have in this question, general reserve we don't have. So third priority profit and loss account. So even if they would not have mentioned even if they would not have mentioned using the minimum amount of undistributed profits, still we would have used undistributed profits at the last only and then minimum amount only would be utilized from that. Okay, as such we have to follow the priority. First, utilization of capital redemption reserve, second security premium, third undistributed profits. Now you are required to pass journal entries in the books of Ship Limited. First, we make a small working for fully paid bonus calculation. So all of you give the heading workings. What workings do we make? Understand it. What are the existing number of equity shares? All of you must be writing it, okay? What are the existing number of equity shares? As we discussed, 2 lakh, 20 lakhs is the amount, rupees. Number of shares are 2 lakhs. And what is the ratio of fully paid bonus shares? As we derived the ratio from that. What is the ratio of fully paid bonus shares? 1 is to 4 here. At the rate of 1 share, so 1. 4 means is 2. Every 4 shares, so 4. So ratio is 1 is to 4. Now, what would be the quantity of bonus shares? Directly you all can do 2 lakhs into 1 is to 4 means 1 by 4. So what would be the quantity of bonus shares? 50,000 shares. But remember, 50,000 shares is the quantity and they are fully paid bonus shares means the value is rupees 10. So 50,000 shares at the rate of rupees 10 each. means 50,000 into 10. What is the amount of bonus? Rupees 5 lakhs. In the quantity terms, it is 50,000 shares. But in the amount terms, what is its value of those 50,000 shares? Rupees 5 lakhs. Now here you all mention, what is the first priority we have to utilize? Capital redemption reserve. So in brief, you all write down, capital redemption reserve, we will use what amount? 75,000. Okay, how will we give this bonus of 5 lakhs? From capital redemption reserve, we will withdraw 75,000. I told you, transfer the money from one pocket to another pocket. So which pocket? Reserves pocket. From capital redemption reserve, you'll transfer how much money to the other pocket? 75,000. Then second priority, security premium. So from security premium pocket, we will transfer what amount? 1,50,000. And third priority, undistributed profits, means P&L account. So whatever balance amount remains, that we will take from P&L account. So from 5 lakhs, if you subtract 75,000 and 1,50,000, means 2,25,000. Remaining 2,75,000 we have to take from profit and loss account. I repeat, existing there are 2 lakh equity shares, okay, and the rate of bonus is 1 for 4, means 1:4. So 2 lakhs into 1 by 4, 50,000 shares would be issued in bonus. Value is 10 rupees face value, so 50,000 into 10, amount of bonus is rupees 5 lakhs. Now how will we withdraw from reserves this 5 lakh rupees to give as bonus? First priority, we will take from capital redemption reserve, entire available amount 75,000. Second priority, we will take from security premium, entire amount available 1,50,000. Now 75,000 plus 1,50,000, do in calculators, 2,25,000. From 5 lakhs, 2,25,000 is taken here. So 5 lakhs minus 2,25,000. Remaining 2,75,000 we take from this undistributed profits, that is P&L account. So this condition is also satisfied, that by using the minimum amount from undistributed profits, means after using the priority reserves, whatever minimum amount required, that only we utilize from P&L account. Okay, so all of you must be clear with this workings. This workings you'll always make for fully paid bonus shares. For partly paid, this kind of workings are not required, because in partly paid, directly final call amount itself is the bonus. Now all of you make the format of journal entries. Journal entries in the books of Shiv Limited, only 2 entries would be there, so small format is sufficient, half a page is sufficient. Okay, pause the video and make the format of journal entries in the books of Shiv Limited, half a page. Okay, I hope all of you have done the formats. Now first entry, for fully paid bonus shares, only 2 entries are there. First, utilization of reserves, reserves to bonus to shareholders, this entry sanction of bonus, and then issue of bonus shares, bonus to shareholders to share capital. Okay, so first entry, reserves account debit to bonus to shareholders. But reserves means which reserves? These 3. So from this, the 3 reserves from the workings, we will debit them. Okay, so capital redemption reserve account debit with what amount? 75,000. Then security premium as the second reserve, we have to use with what amount? 1,50,000. Security premium account debit $1,50,000. Then after security premium, profit and loss account, we have to debit with 2,75,000. Profit and loss account debit 2,75,000. Okay, so reserves account debit, but specifically which reserves you have to mention. Don't directly write reserves account debit 5 lakhs. Okay, which reserves, what amount you need to mention that. So reserves debit means capital redemption reserve, we will utilize 75,000, security premium 1,50,000, and profit and loss 2,75,000. To bonus to shareholders account five lakhs. Okay, total of all the three, and as such bonus is 5 lakhs. Being sanction of fully paid up bonus shares. In the first narration, you always mention sanction. Okay, being sanction of fully paid up bonus shares. Now, second entry, here only two entries are there. Directly, this bonus to shareholders account, you have to reverse and debit and close it. Bonus to shareholders account debit. 5 lakhs to equity share capital account directly you transfer the amount to equity share capital account 5 lakhs being utilization of bonus to give fully paid bonus shares in 1:4 ratio. Total 5 lakhs plus 5 lakhs 10 lakhs. Okay, so very simple it is. Only two entries to be passed: reserves to bonus to shareholders, bonus to shareholders to equity capital. Only you have to be careful about the calculation of amount of bonus and which reserves in what order to be debited. That we have seen in detail in lecture 1. Now what you all are supposed to do? Question 6. Read it on your own. I am not discussing it also. I'll discuss it and explain the solution obviously. But read it on your own. Solve it on your own. Pause the video. Okay, read, solve, workings, everything do on your own. Then you play the video. You'll get solution ready in front of you. An explanation of question 6 also. And verify you got it correct or not. Explanation will be there. So you will be able to find out if you have done any mistake, and you'll be able to understand also if you have done any mistake. So pause the video. Try question 6 on your own. After you finish workings and entries, everything, then only play the video and verify you got it correct or not. Come on, start everyone. 1, 2, 3, start. Yes, so all of you should have done the question 6 workings, entries, everything on your own. Now I'm discussing the question as well as its solution. You all verify you got it correct or not. Okay. Shiv Limited had issued share capital of rupees 10 lakhs in rupees 10 equity shares. So we discussed it in the previous question also. 10 lakhs divided by 10. How many number of equity shares would be there? 1 lakh equity shares would be there. Security premium can be utilized, okay, for fully paid up bonus shares. Capital redemption reserve can be utilized as a first priority for fully paid up bonus shares. And then undistributed profits can also be utilized. And what is the meaning of undistributed profits? P&L account credit balance. It was decided that fully paid up bonus shares of rupees 10 be issued at the rate of 1 for every 4 shares held. So 1 for means is to 4. Means what is the ratio of bonus? 1:4. And that this resolution be carried out by underline using the minimum amount of undistributed profit. So as such, in the order of priority, undistributed profit we use at the end only. First priority we shall use capital redemption reserve, second security premium, and third would be undistributed profit. Check your workings. Existing number of shares are this 1 lakh. Ratio of bonus is 1:4. So bonus shares 1 lakh into 1 by 4, 25,000 shares. They are of 10 rupees, so 25,000 into 10, the value will be 2,50,000. And how will you take this 2,50,000? First priority from capital redemption reserve 75,000. Second priority from security premium 1 lakh. Now 75,000 plus 1 lakh, 1 lakh 75,000. So 2 lakhs minus 1 lakh 75,000. 75,000 will take from P&L account, that is undistributed profits. Now two entries of fully paid bonus shares. First entry, reserves account debit to bonus to shareholders. But reserves account, which specific reserves account debit? Capital redemption reserve account debit 75,000. Security premium account debit 1 lakh. Profit and loss account debit 75,000. This is reserves account debit. To bonus to shareholders account 2,50,000. Being sanction of fully paid up bonus shares. Then this bonus to shareholders you'll reverse and debit and close it with same amount 2,50,000. And directly you'll transfer it to equity share capital account 2,50,000. Being utilization of bonus to give fully paid up bonus shares in 1:4 ratio. Total of journal 250 plus 250, 5 lakhs. So I hope everyone got this solution correct on your own. Okay. Now we will be taking up with mixed example where we have partly paid bonus also and fully paid bonus also. Here one example I'll explain and do it on the screen. Second and third, two more examples you'll try on your own. And as you did for fully paid bonus, you'll play the video and verify you got the solution correct or not. So we will be doing with one example of mixed example of partly paid and fully paid bonus shares. Yes, so now we take up with question number 3, which is a mixed example. Be attentive. The following is the balance sheet of Keynes Limited share capital. Authorized capital has no relevance in our solution. In the journal entry it has no relevance, but in balance sheet it will definitely come. If you all remember, we had done that first question of share capital at the last Zoom session. There we discussed that authorized capital we mentioned in the balance sheet and double underline. Okay, so only in balance sheet it is to be mentioned, otherwise in the journal entries it has no relevance. No relevance in the journal. Okay, 1 lakh equity shares of 10 each, 10 lakhs. Issued and paid up 50,000 equity shares of 10 each, rupees 8 paid up. So how much is final call not yet asked from the shareholder? Remaining 2 rupees. Okay, 10 minus 8 paid up. So how much final call is pending? 2 rupees. So probably if the company gives bonus, then first company will have to make partly paid shares as fully paid up and give this 2 rupees of bonus. After that only company can issue any fully paid up bonus shares. Okay, I repeat, if in case a company issues partly paid bonus as well as fully paid bonus, then first company has to convert partly paid shares into fully paid shares by giving partly paid bonus shares. Then only fully paid bonus shares can be issued. This we will study in detail in the SEBI guidelines also in the next lecture, that no fully paid bonus shares can be issued until partly paid shares are converted into fully paid shares. However, final call 2 rupees is pending. Next, reserves and surplus. Security premium. For fully paid bonus, it can be used. For partly paid bonus, it cannot be used. Okay, security premium. Capital redemption reserve, same. For fully paid bonus, it can be used. For partly paid bonus, it cannot be used. General reserve can be used for fully paid bonus as well as partly paid bonus. Okay, general reserve is a revenue reserve. So general reserve, all of you can see this, we discussed in first lecture. General reserve can be used for partly paid bonus as well as fully paid bonus. I hope all of you are able to recollect this, done in the first lecture. Now, I repeat, security premium can be used for fully paid bonus shares but cannot be used for partly paid bonus shares. Capital redemption reserve can be used for fully paid bonus shares but cannot be used for partly paid bonus shares. General reserve can be used to give fully paid bonus as well as partly paid bonus. The company passed the following resolution that the general reserve be utilized in making partly paid shares as fully paid, and as such we discussed general reserve is the only one available for partly paid bonus shares. So general reserve to be utilized in making, not parity, make it partly paid bonus shares as fully paid. What would be that amount? Final call of 2 rupees would be given as partly paid bonus. So 50,000 shares into 2 rupees. Okay, this 50,000 shares into 2 rupees of final call. That is what amount? 1 lakh rupees. This 1 lakh rupees of partly paid bonus we have to give by utilizing from which reserve? General reserve. I repeat, that the general reserve be utilized in making partly paid shares as fully paid up, means partly paid bonus is to be declared. Final call of 2 rupees was pending, that we have to give as bonus. On 50,000 equity shares issued into final call 2 rupees, 1 lakh is the partly paid bonus we have to give, and we have to give that by utilizing general reserve. Further, 10,000 fully paid bonus shares, directly quantity given, no need to make this calculation, ratio is not given now, direct quantity is given. Direct quantity is given 10,000 fully paid bonus shares, no ratio is given. 10,000 fully paid bonus shares, rupees 10 each, to be issued to the existing shareholders directly. This is what fully paid bonus. This was partly paid bonus. 10,000 fully paid bonus shares to be issued. What will be the value of this 10,000 shares? 10,000 into 10, 1 lakh. For this purpose, general reserve should be utilized to the minimum extent. Quite obviously, first priority we will be using capital redemption reserve, second priority security premium, and third priority from 2 lakhs we use 1 lakh, 1 lakh is still remaining. So third priority we will use whatever remaining amount required from general reserve. I repeat, first priority we will use capital redemption reserve, second priority we will use security premium, and in third priority whatever balance amount required for this 10,000 shares we will use from general reserve. In general reserve, 2 lakh minus 1 lakh, 1 lakh is still remaining. You are required to pass journal entries to record above and also show the relevant effects in balance sheet after bonus issue. Underline this portion, everyone. We don't have to pass only journal entries, but what else is asked? Also show the relevant effects in balance sheet after bonus issue. So if you remember, as we made that small balance sheet of question 1 of share capital chapter, same way here also small balance sheet is to be made, and in that we have to show the effect. Which effect? I told you, finally the company transfers money from one pocket to another, reserves to share capital. So we have to show it in the balance sheet, how reserves will decrease and share capital will increase. That effect in the balance sheet is also asked over here. So understand it well. How will we be doing it? We'll make the workings first of all. For partly paid bonus, we don't have to make any working. 1 lakh is the bonus. We have to make the working only for fully paid bonus shares. So what shall be the working? First working, and only one working is there. Directly the bonus shares are given, 10,000 bonus shares. Even that calculation of bonus shares is not required. Directly it is given 10,000 bonus shares of rupees 10 each. We just have to show the utilization of reserves, that's it. So 1 lakh is the value of bonus shares. Okay, 10,000 bonus shares of rupees 10 each, 1 lakh is the value of bonus shares. How are we going to use this 1 lakh rupees? First priority from capital redemption reserve 20,000. Second priority from security premium 10,000. Now 20 plus 10, 30,000. How much is required more? 70,000. That remaining 70,000 we will use from general reserve. And as we discussed, from 2 lakhs of general reserve, 1 lakh is used in partly paid bonus shares. So still 1 lakh is remaining. From that 1 lakh, we can definitely use 70,000 to give fully paid bonus. I repeat, from 2 lakh, 1 lakh was used for partly paid bonus, 1 lakh is still remaining. From that 1 lakh, we can easily give 70,000 of fully paid bonus also. So all of you pause the video and make the format of journal entries in the books of Cairns Limited. Okay. Here, how many entries will be there? 3 of partly paid bonus, 2 of fully paid bonus. So total how many entries will be there? 5 entries will be there. No, no, no. 4 entries only. Because what we will be doing is first entry we will combine. You all can see first entry of partly paid bonus is also reserves to bonus to shareholders. Fully paid bonus is also reserves to bonus to shareholders. So this first entry of partly paid and fully paid bonus is same, that we will combine. Okay, that first entry we will combine. So first, second, third, fourth. This will be your first entry, second entry, third entry until partly paid bonus are given, fully paid bonus cannot be given. So then fully paid bonus. First entry we will combine, then second, third and fourth. So total 4 entries only we are going to pass. So make the format accordingly, everyone. Yeah, done. All of you should have done the format. First entry. Reserves account debit to bonus to shareholders. So reserves account, how will we debit? First, capital reserve account we have to debit. Okay. First, capital reserve, redemption reserve with 20,000. Capital redemption reserve account debit with what amount? 20,000. Then security premium account debit with 10,000. Securities premium account debit 10,000. Then general reserve account debit with 70,000. General reserve account debit 70,000. Okay, 1 minute. Not 70,000. General reserve this 70,000 plus this 1 lakh. We are passing combined entry for fully paid and partly paid bonus. So 70,000 and 1 lakh. 1 lakh for partly paid bonus. 70,000 for fully paid bonus. We are actually utilizing 1,70,000 from general reserve to give total bonus. Okay. To bonus to shareholders account with total of 170, 190, 2 lakhs. Why total of 2 lakhs? It's a combined entry of partly paid and fully paid bonus. 1 lakh is fully paid bonus and 1 lakh is partly paid bonus. So total amount taken from reserves is 2 lakh rupees for fully paid plus partly paid bonus shares. Okay, the first entry we can combine. Capital redemption reserve 20,000, security premium 10,000 and general reserve 70,000 plus 1 lakh, 1 lakh 70,000 to bonus to shareholders. Being sanction of partly paid and we have passed combined entry, so and fully paid bonus shares, being sanction of partly paid and fully paid bonus shares. Now second entry we will pass. First, now we will make partly paid bonus shares, partly paid shares fully paid up by giving partly paid bonus. So now we will pass those two entries of partly paid bonus first. As I discussed, first entry we can combine, then you will pass two entries of partly paid bonus, then you will pass the next entry of fully paid bonus. So in that order we will follow here. Now final call money due. So equity share final call account debit to equity share capital account. Now what amount equity share final call to equity share capital? Same 1 lakh. 50,000 shares into 2 rupees of final call, so 1 lakh. 50,000 shares into 2 rupees of final call, 1 lakh rupees. Being final call money due. Now partly paid bonus, third entry, bonus to shareholders account debit okay, instead of bank account debit we are not going to receive that, so bonus to shareholders account debit to equity share final call account. What amount? This 1 lakh of final call. Okay, bonus to shareholders account debit to equity share final call with this 1 lakh of final call. Then being utilization of bonus to make partly paid shares as fully paid. Now last entry we will pass for fully paid bonus shares. So for fully paid bonus shares, directly bonus to shareholders account debit to equity share capital account. Bonus to shareholders account debit to equity share capital account. What amount? Fully paid bonus amount of 1 lakh rupees. So from bonus we will use this 1 lakh of fully paid bonus shares amount and directly straight away transfer it to share capital. So this bonus account now gets closed. Here you credited with 2 lakhs, here you debited with 1 lakh, and again here you debited with 1 lakh for fully paid bonus. So that 2 lakhs account now gets closed. Okay, just for understanding you need not write that. Being utilization of bonus to give fully paid bonus shares. Ratio is not given, so simply to give fully paid bonus shares. Okay, 4 entries will come in all because we combined the first entry. So total would be 2 lakh, 3 lakh, 4 lakh, 5 lakhs. Now you are asked to make a balance sheet. Okay, all of you can see here you are asked also show the relevant effects in the balance sheet after bonus issue. So what we shall do is, first we'll make a blank format of balance sheet. Below that we'll show the notes of bonus shares, and then the solution would get over. So you can give a heading, balance sheet of Keynes Limited. Okay, balance sheet of Keynes Limited in bracket after bonus. Okay, this balance sheet is after bonus. After the bonus effect, how the balance sheet would appear. So columns of balance sheet, you all must remember in 12th standard also you are done in company final accounts. Particulars, note, amount. Make 4 columns: particulars, note, amount and amount. Now make this format, pause the video, make this format, and then you can play the video. Okay, now here first heading on the liabilities side, what we give is equity and liabilities. Okay, equity and liabilities. In that, since we have to show only the effect on bonus on the share capital and reserves, only first item will come in the balance sheet, that is shareholders funds. And that shareholders funds include 2 things that we have to show in detail. One, it includes share capital, which we will show the details in note number 1, and B, it includes reserves and surplus, that details we will show in note number 2. Okay, so all of you make this blank format, pause the video, make this blank format of balance sheet with equity and liabilities. In shareholders funds, 2 things appear: share capital and reserves and surplus. What amounts will come, we will show in the note 1 and 2 below the balance sheet. You can pause the video and make it. Okay, so now let's make with this notes of share capital and reserves. First note, share capital. Now what amount will come in share capital? Understand it, everyone? Very first, authorized capital. So here that authorized capital has relevance just for an information to the shareholders, otherwise it is not to be included in the total of balance sheet. Here we'll write that authorized capital. Here we had written no relevance in journal, but in balance sheet it will come. What is the authorized capital? 1 lakh equity shares of 10 each, 10 lakh rupees. That we will write here. 1 lakh equity shares of rupees 10 each, so total amount is 10 lakhs, and this you all double underline. If you have attended that share capitals question 1 in the Zoom session, you'll be able to understand what I'm trying to say here. Double underline. Double underline means it is not to be included in the total. Now what you all can do is, as I explained you earlier also, issued, subscribed and paid up capital you can combine into one heading. Issued, subscribed and paid up capital you can combine into one heading, because here all are same, and this would be included in the total of balance sheet. Now understand this properly, everyone. Be very, very attentive how to get this issued, subscribed and paid up capitals amount. Listen very carefully. Okay, all of you. Just be very attentive here. See, we already have 50,000 equity shares here. We already have 50,000 equity shares here. How much bonus is given? 10,000 shares. So now after the bonus issue, what will be the effect? 50,000 shares were already there. 10,000 are given as bonus. So now we will have 60,000 equity shares of rupees 10 each. Now we will have 60,000 equity shares of rupees 10 each. One more difference. Earlier we had 50,000 equity shares of 10 each, but they were 8 paid up. Now we have given partly paid bonus also. So now these 10 rupees shares are fully paid up. Now they are not partly paid up, now they are fully paid up. Okay, I repeat it. Earlier we had 50,000 shares. We gave 10,000 fully paid bonus shares. So after the bonus, now in the balance sheet, company will have 50,000 plus 10,000, 60,000 bonus, total equity shares. Also, earlier in the balance sheet, there were 10 rupees but 8 paid up, partly paid up. Now company has given 2 rupees of partly paid bonus also. So now they become fully paid up. So 60,000 into 10, 6 lakhs would be the amount of share capital. In bracket of above, this disclosure is compulsory as per Companies Act. So if you don't write this disclosure, examiner will deduct the marks. Okay, this disclosure is compulsory to be written in bracket of above. Okay, of above, you mention it this way only. Of about 10,000, of about 10,000 shares are issued as bonus. This is compulsory disclosure to be written in the bracket in balance sheet whenever bonus shares are issued. How many fully paid bonus shares are given? 10,000. That we have to mention in bracket. That out of this 60,000, for information purpose to the shareholders, out of this above 60,000, 10,000 shares are issued as bonus. Means company did not receive money for this 10,000 shares. Total will come to 6 lakhs. So this is how share capital will appear. What was the share capital earlier? What was the share capital earlier? 4 lakhs. And what is the share capital now? 6 lakhs. Why 4 lakhs has become 6 lakhs? Because 2 lakhs we have given as bonus. So that 4 lakhs has become 6 lakhs. Okay. Second note will come reserves and surplus. Second note will come this reserves and surplus. Second note. Now, which reserves did we have? We had security premium and reserves and surplus. But that security premium gets closed because entire 10,000 is used in security premium to give fully paid bonus. So now that does not exist. Capital redemption reserve gets closed because entire capital redemption reserve 20,000 is used in giving fully paid bonus. General reserve still exists. We had 2 lakh in general reserve, but we used only 1,70,000. So only general reserve remains in reserves and surplus. How much general reserve remains in reserves and surplus? Earlier we had 2 lakhs. From that we gave total bonus of 1,70,000 fully paid as well as partly paid. So 30,000 remains in general reserve. I repeat, no amount remains in security premium account because full 10,000 is used in giving fully paid bonus. No amount remains in capital redemption reserve account because full amount is used in giving fully paid bonus. From general reserve 2 lakhs, we have used 1,70,000. 1 lakh for fully paid, partly paid bonus, 70,000 for fully paid bonus. So 2 lakhs minus 1,70,000. How much remains in general reserve still? In general reserve, 30,000 is left out. This we have to show in the balance sheet. Share capital from note 1 we get 6 lakhs. This one 10 lakh authorized capital not to be included in the total. Reserves and surplus from note 2 we get 30,000. So total share capital 6,30,000. Now if you all remember in the first lecture I explained you that bonus means you are simply transferring the money from one pocket to another. Total amount 2 lakh remains as it is. Same thing you can verify in today's solution also. What was the total share capital and reserves before the bonus? Check this amount. What was the total share capital and reserves before the bonus? 4 lakh plus 10,000, 4 lakh 10 plus 20,000, 4 lakh 30 plus 2, 6 lakh 30,000. What was the total shareholders funds share capital plus reserves before the bonus? 6,30,000. What is the shareholders funds after the bonus? 6,30,000. Total amount remains same only. You are just transferring the money from one pocket to another. From reserves, which were 2,30,000, 2 lakh plus 20 plus 30. From reserves which were 2,30,000, only 30,000 remains because 2 lakhs is transferred. Where it is transferred? Share capital. So 4 lakhs of share capital becomes 6 lakhs. Share capital increases by 2 lakhs, reserves decreases by 2 lakhs. So from reserves pocket you are transferring the money to share capital pocket. This is the effect in balance sheet. That's why in the question balance sheet is asked, so that you understand this logic. Capitalization of reserves. That language also I made you write in the introduction. Okay, you understand this logic. That bonus means you are withdrawing from reserves and giving in share. So share capital increases, reserves decreases. This is merely a book adjustment in the balance sheet. But win-win situation. Company's balance sheet financial position remains same. Shareholders' wealth will increase. I already explained in the first lecture. Okay. Now all of you do one thing, try question 7 and then question 1, both the questions on your own. I repeat, try question 7 and question 1, both the questions on your own, and then play the video and verify you got the answer correct or not. All of you try the things on your own, come on. Yes, so all of you should have completed the solutions of question 7 and question 1. Now verify you got it correct or not. I'll be just reading it fast and explaining the solution, so be attentive. The following items appear in the balance sheet of Cherry Limited. Authorized capital will come only in the balance sheet. 4 lakh equity shares of 10 each, 40 lakhs. Issued and paid up 20,000 equity shares of 10 each, 8 paid up. So how much is final call? 2 is final call to be given as bonus. Okay. And 20,000 into 8, presently the share capital would be 1,60,000. Okay. Security premium 40,000, only for fully paid bonus it can be used. Capital redemption reserve only for fully paid bonus 80,000. Okay. Only for fully paid bonus it can be used. For partly paid bonus it cannot be used. Same way for this too. Okay. And general reserve can be used for fully paid bonus as well as partly paid bonus. The company passed the following resolution, that the general reserve be utilized in making partly paid shares as fully paid. So there are 20,000 shares and 2 rupees of final call we will give in bonus. So 20,000 into 2. The partly paid bonus amount will come to 40,000 rupees. Okay, that we have to give from general reserve. Okay, that we have to give from general reserve. Because security premium and capital redemption reserve cannot be used for partly paid bonus. That further again quantity directly given, 40,000 fully paid equity bonus shares of rupees 10 each to be issued to existing shareholders. For this purpose, general reserve should be utilized to the minimum extent. So first priority we will use capital redemption reserve, second security premium, and last general reserve. You are required to pass necessary journal entries to record above and also show the relevant effects on share capital and reserves and surplus after bonus share. So first check the workings everyone. 40,000 bonus shares are directly given. So into 10 rupees their value will be 4 lakh rupees. Okay. Now how will we use this 4 lakhs? First priority capital redemption reserve 80,000. Second priority security premium 40,000. 80 plus 40, 1,20,000. So 4 lakhs minus 1,20,000, 2,80,000 from general reserve. Even if you give from 8 lakhs, 40,000 of bonus partly paid from general reserve, 7,60,000 is still remaining. So you can easily give 2,80,000 of bonus. Now check your entries. Capital redemption reserve account debit 80,000. Security premium account debit 40,000. Okay. Then general reserve account debit what amount? 40,000 for partly paid bonus plus 2,80,000 for fully paid bonus. So general reserve account debit with 3,20,000. Total 2 bonus to shareholders 4,40,000. Then equity share final call to equity share capital, 20,000 shares, 2 rupees of final call. So 20,000 into 2, 40,000. And then bonus to shareholders to equity share final call, same 40,000 rupees. And then bonus to shareholders to equity share capital, this fully paid bonus of 4 lakhs. Okay. Now balance sheet of Cherry Limited, first you would have made the blank format, then first the notes, check it up everyone. For notes, 4 lakh equity shares of 10 each, 40 lakhs. Authorized capital in share capital will remain as it is, and that is to be double underlined, not to be included in the total of balance sheet. Now the other shares, understand it. We have 20,000 shares already in the old company plus 40,000 given in bonus. So 20 plus 40. Now we will have 60,000 equity shares of 10 each, 6 lakhs. And then how many are given in bonus from that? 40,000. So that you will write in disclosure. Of about 40,000 shares are issued as bonus. Total 6 lakhs. Now capital redemption reserve and security premium are fully utilized, so they will no more come in the balance sheet. Only general reserve will come. From 8 lakhs, we have utilized 3,20,000. So 8 lakhs minus 3,20,000, 4,80,000 of general reserve will come in the balance sheet. 6 lakhs from note 1 share capital, 4,80,000 from note 2 general reserve, total 10,80,000. What was the financial position before the bonus issue? This 1,60,000 plus 40,000 plus 80,000 plus 8 lakhs is also 10,80,000, and after the bonus issue also 10,80,000. Now check your answer for question 1. The authorized capital of Saurav Limited Company is rupees 12 lakhs. Okay, authorized capital only in balance sheet. Divided into 12,000 equity shares of 100 each. Mind well, the face value is 100 now. Out of which 8,000 shares are issued and fully subscribed. So issued are 8,000. 75 per share is called up and paid up. So how much is final call still remaining to be collected? 25 rupees. The company has following indisposed balances as on 31st March 2017. Also, presently 8,000 into 75, what is the share capital? 6 lakhs. Now what are the balances? Here we have only P&L account and general reserve, and both are revenue reserves. So both of them can be used for fully paid bonus as well as partly paid bonus. We don't have any capital redemption reserve and security premium here, so both can be used for fully paid and partly paid bonus. The directors have decided at general meeting to capitalize the above balances by first by paying 25 rupees per share on partly paid shares in order to make them fully paid. So as we discussed, this 8,000 shares into final call of 25. What will be the amount of partly paid bonus? 2 lakhs. Let us say that 2 lakhs we use from P&L account. Any reserve can be used in any order, but suppose we use it from P&L account. So 2,30,000 minus 2,30,000 will still remain in P&L account. And by issuing again 1,000 fully paid equity shares as bonus, even the ratio is given 1 for 8, 1 is to 8. Even if you do 8,000 into 1 by 8, you will get 1,000 only. And the balance of P&L account to be utilized for the said purpose. It's clearly given, balance of P&L account to be utilized for the said purpose means for this bonus we have to use P&L account in priority first. Okay, first we will use P&L account in priority. So partly paid bonus we have already given 2 lakhs from 2,30,000. Now this 1,000 bonus shares of 100 each, its value comes to 1 lakh, 100 each. Okay, face value is 100 now. So 1 lakh is the value. From that 1 lakh, P&L account only 30,000 remains. 2,30,000 minus 2 lakhs. So that we use from P&L account. Now 1 lakh minus 30,000, remaining 70,000 we use from general reserve. So what will be the entries here? Okay, journal entries in the books of Saurav Limited. Now here you all can see in the question only journal entries are asked, balance sheet is not asked. But for practice purpose I have shown the balance sheet also, you all can just verify that. Okay, otherwise only journal entries are asked, balance sheet is not asked. Profit and loss account debit with this 2,30,000. Why 2,30,000? 2 lakhs for partly paid bonus plus 30,000 for fully paid bonus, so 2,30,000. Okay, 2 lakhs for partly paid bonus and 30,000 for fully paid bonus. So profit and loss account debit with 2,30,000. General reserve account debit with this 70,000. To bonus to shareholders 3 lakhs. Now equity share final call to equity share capital, what final call is due? 8,000 into 25, 2 lakh rupees. And then bonus to shareholders to share final call, same 2 lakh rupees. Then fully paid bonus of this 1 lakh, what will be the entry? Bonus to shareholders to equity share capital 1 lakh. Now balance sheet was not asked in the question, but if any one of you has practiced it, you can check it. If not done, then it's okay. In the question, balance sheet is not asked. But in case if you have made balance sheet of Saurav Limited, then it would be as it is. In balance sheet, you will have 12,000 equity shares, authorized capital, 12,000 equity shares of rupees 100 each, that is 12 lakhs. Double underline. And here we have 8,000 equity shares issued plus bonus 1,000. So 8,000 plus 1,000. Now we will have 9,000 equity shares of 100 each, 9 lakhs. And in that you will mention 1,000 shares are issued as bonus in the disclosure. Now P&L account completely gets closed because 230 is entirely used. In general reserve 85,000 minus we used only 70,000. So what general reserve will remain? 85 minus 70, 15,000. In balance sheet, shareholders funds share capital 9 lakhs plus general reserve, reserves and surplus 15,000, 9 lakh 15,000. So I hope everyone has got this correct. Okay, both the questions. If not, then you can play and rewind the video again to understand the typical points. That will be all in this lecture. Bye everyone. Take care. See you in the next lecture.